You've spent months perfecting your strategy. On your demo account, you are effectively a god, doubling your simulated balance with clinical precision. But the day you fund a real account, that edge vanishes and your balance wipes out. Going live requires moving from a risk-free laboratory to an environment where every price movement impacts your actual savings. The mechanical process of clicking a button remains the same, but the psychological stakes are entirely new. This failure stems from more biology. When you risk fake money, the logical, calculating prefrontal cortex drives your decisions. But the moment real capital is at stake, your brain's threat detection center, the amygdala, takes over. To your amygdala, a financial loss registers as a physical threat to your resources. It triggers a fight or flight response, causing you to widen your stop losses to avoid the pain of losing, or take aggressive, revenge-fueled trades. In a live environment, discipline becomes a finite biological resource that drains with every tick against your position. Because of this, your demo account performance is an unreliable predictor of live survival. Even if you manage to control your neurology, demo servers hide structural realities of the market that silently eat into your margins. This comparison illustrates execution slippage. Simulators operate in a closed loop, giving you instant fills at perfect prices. But in a live electronic communication network, or ECN, your order has to find a real human or institutional counterparty. By the time that match happens, the price often drops several pips below your target. Add in the latency of routing your order to a liquidity provider, a process taking milliseconds, and those perfect simulated entries disappear. If your strategy relies on razor-thin margins, these slight delays turn simulated wins into live losses. Moving into this environment based on a gut feeling of readiness typically leads to a rapid loss of capital. To survive, you must replace intuition with an objective, data-driven transition protocol. Phase 1 of this protocol starts with an uncompromising audit of your demo trading journal. First, you must hit the rule of 100 trades. 100 trades is the absolute minimum sample size needed to prove a true statistical edge, filtering out results that might just be a lucky streak in a trending market. Your performance dashboard must maintain a profit factor over 1.5, ensuring gross profits outweigh losses. Risk limits are equally strict. Your maximum drawdown must stay below a 10% threshold, and your trade expectation must result to a positive number. Firmly, if your demo data cannot pass this exact checklist, moving to a live account is a gamble, not a graduation. Even with verified data, jumping from zero risk to trading thousands of dollars often causes the psychological breakdown we discussed earlier. Phase 2 uses a hybrid bridge to introduce skin in the game through cent accounts. A cent account treats $10 as 1,000 cent units. The profit ticker fluctuates normally, providing the emotional sting to train your brain without financial ruin. Then incrementally increase position size only after 2 profitable weeks or a 5% growth target. This phased approach systematically desensitizes the brain's threat response, building emotional calluses required for professional-sized accounts. Professional trading requires knowing exactly when to stop. Phase 3 is the circuit breaker. Before you place a live trade, establish a hard cutoff. If your live account hits a 15% drawdown, you must immediately cease live execution. Returning to the simulator serves as an ego-free diagnostic procedure to find out what went wrong. This logic tree shows how to isolate the problem. If you trade both accounts and they are both losing, your strategy has likely experienced decay. If the demo is winning while the live account is losing, the issue is your psychological execution. Using hard stops and reversion protocols protects both your financial capital and your mental capital during inevitable market slumps. The goal of this transition is to stay live through rigid adherence to data. Auditing your history is the only way to be sure you are ready. Download our Live Readiness KPI worksheet to evaluate your last 100 demo trades. Once your data confirms you are ready for the next step, start your professional journey.